Okay. Bada boom, bam, bing. Let's talk about. We're gonna do news. We're gonna talk about prop firms, and then we can talk about the general state of the economy. This is your reminder that the FX Summit 2024 conference is this November, November 15th to the 17th in Dubai, Expo City, Dubai. This is going to be the #1 conference for traders, investors, and crypto enthusiasts. If you're an entrepreneur, an investor, or a trader, this is going to be the best conference for you to come, meet all the right people to push your journey to the next level, get exposed to the next companies that are going to be taking over, and whatever the next brokers, whatever the next prop firms are, they're going to be present at the summit. And we're going to have speakers from every sector of the industry, including technology, including startups, the institutional side, folks that have worked in traditional finance, New York Stock Exchange, brokers, market makers. We're going to get to hear from the full scope of participants, as well as obviously the top of the top traders that will come and share their journey and hopefully give you insights that you need to take your trading to the next level. So if you're interested, go ahead and head to fxsummit2024.com and secure your early bird tickets. All right. If you have any questions or any pairs you would like me to cover, put them in the chats and let's get to it. Expo City Dubai confirmed? Yes. Well, to be honest, they've been confirmed since the beginning. We were just looking for an alternative venue just to have more optionality. It's time to just lock in with Expo City and really commit to that being the venue. Is it my #1 choice? Kind of, right? There was once I went and visited a few other venues, I started to have a change of heart. However, from the outside, Expo City is the sexiest looking venue. So that's going to be the venue for 2024. Post-conference events, we're still locking in a few of those venues, but I'll show you maybe at the end of this stream what contract we signed for one of the post-conference events. I think it might blow your mind. Let's talk trading real quick, then we'll go news, prop firm news, and of course, we'll see any data releases that came out. We had core retail sales come out this morning, as well as weekly unemployment claims. This comes out every week. We have FOMC member Waller speaking. Oh yeah, we already talked about this. The University of the Bahamas, that one. Remember, I said that was sketchy. What is a U.S. regulator doing going to speak in the Bahamas about U.S. regulator? What? Okay, so NAS100, beautiful rejection. We have these lows. Actually, let me explain this in a simple way as possible. Remove the drawings. The market is still trending bullish. So we have lows getting higher. We have highs getting higher. And so what I'm expecting is a continuation of this trend unless we break these lows. So for today, I want to see a pullback to the 17,608 region. It's a long way down. Don't get me wrong, it is a long way down, but I want to see a pullback to the 17,600 area for a double bottom before we continue to the upside. So this is a very simple waiting for a double bottom play. Once we get that pullback, I'll feel a lot more confident in continuing to buy. I don't like buying from these levels up here. Another option is that the market could hit a sell zone before we hit the buy zone, and this is the move for today. So the market could run up for the double top before it begins the correction. So either way, I'm not going to take the shorts if that's what the market decides to do. I'd much rather wait for the double bottom for longs. And of course, we have this area of support here. But if the market wants to come down for an extended pullback, it would look like this. We had a beautiful impulse to the upside in the direction of the trend. A pullback about 90% of the initial impulse, and then a continuation. So my two buy areas are 17,600 and 17,240. 17,240 and 17,600 are my two buy levels. Cool? Any questions, comments, concerns? All right, let me hit the I told you so real quick on gold. Put something in the YouTube chat if you guys have seen me talk about gold in the past 2 or 3 weeks. And I've been talking about the same exact price level for about 2 or 3 weeks. Put something in the chat if you remember this. Domingo says, gold, bro, thank you. Did you take the gold trade? Because I've been calling this out for about 4 weeks now, while the market was sitting up here and consolidating, and every single morning, everybody's asking me, Roy, what is gold gonna do? Bro, here's like the 5 pip move I caught on gold today. Okay. Who took this trade here? Nobody? I'm scared to trade gold, but to be honest, in the past, I lost a lot of bread on it. All right. No one's obligated to trade anything, right? So if you don't trade gold, that question was not for you. This is not that was not a suggestion for people to start second guessing their trading. This was strictly a question for the folks that made a conscious choice to trade gold as part of your plan, just to see if you took this trade. I didn't take this trade either. I don't trade gold. I just know that I called this out, and gold traders got a free lunch out of it, or a free breakfast. He says, dude, you nailed it. Yeah, big surprise. So why you sound surprised? So we do this live every day. Bitcoin has broken the 50,000 price level. If there was one unexpected thing that's happened this year, if there's the most unexpected price that I can see across the whole market, number one is NVIDIA, and then number two is Bitcoin. I was expecting a much deeper correction before the halving, which is in April. If you guys look at the demand for Bitcoin right now, especially amongst institutional investors, and then you look at the on-chain analytics for how much Bitcoin is available in the open market and how much is being mined on a daily basis, there is not enough supply to make up for the demand, meaning that prices are going to continue to go up until that balances itself out. I think that once we hit 60 or 70,000, we're going to see a correction back down. But I don't think we're going to see a correction from these levels. I think the hype is real right now. If we look at, there's two main kind of bubbles forming right now. There's the AI bubble. Specifically, we're going to be talking about NVIDIA, Microsoft, and anyone who's really doubling down on AI. NVIDIA being worth more than Apple makes no sense, especially if they have an annual revenue of $18 billion. I don't know how they can justify a $1.9 trillion valuation unless they're like, there's something very broken about that market. Now, the truth is, I was just telling the VIP members that the market can remain irrational longer than we can remain solvent. So if we're going to keep saying, oh, the market's too high, it has to come down, and we keep trying to short, we're going to get crushed. So for now, we're trading in the direction of the market. With that being said, do I see a correction coming soon? The answer is yes. I think institutions who bought at a very favorable price for the tech stocks, they're going to be taking profits. Same with Bitcoin. Look at how long the market was kind of in this middle period. We had from June of 2022 till about the summer of last year. Anyone who had bought Bitcoin in this area is sitting on considerable profits, and they might consider taking some money off the table soon, especially if they're large bag holders. So the more money that you invest in these high risk assets, when it starts to really pump up, you're taking profit moves the market. If you look at Elon, for example, a tweet of his can move the markets. When him and what's the guy's Michael Saylor and other public figures are buying, $1 billion worth of Bitcoin. If they go to sell 200 million or 150 in profits, that's going to push the market down. When a lot of investors are doing that at the same time, that's when you see the cascade effect, where they'd start taking profits, retail starts to panic and starts to take profits as well. Hedge funds, risk parity funds, high frequency trading funds, it triggers kind of like a sell model because now they become net sellers after a percentage shift in the market. And then you have the derivatives, the derivatives firms, you have basically all of the hedge funds and the traders start to panic sell and drive the prices down. And so I'm not sure if we're going to get a deep correction this year back to 30 or 20. But if we do, I think it's going to be from higher levels. That's a phenomenon I can't really explain. Besides, investors who have been around for 15 years have been used to this low interest rate environment where money is free and there's endless liquidity in the system. And they're used to, especially after 2020, these astronomical valuations that happen in a short amount of time that lead to a massive run up and an exit. That's not how markets are supposed to work. We're not printing money the same way that we were in 2020. Interest rates are at 5%. This is not sustainable. And so at some point, do I see a correction? Yes, I think it's coming soon. Is it right now? I don't believe so. And I'm not going to sit here and try to guess the top of the market. Instead, I would much rather wait for the market to give me, you know, like wait for the market to fully bleed out and then continue trading in the direction of the trend. I took it, but Funding Pips closed our account. User who message me privately who that is. I just want to make sure that you're one of our members and not an op. Okay. This stream helped my confirmation. Love to see it. Look at GJ. I've never looked at GJ on the stream. I'll do it in a little bit. Question: do seasonal tendencies play a factor in this strategy? I noticed that NAS usually trends downwards towards the middle of February. Look, obviously seasonality affects the market, but it would affect the market more in terms of volume rather than direction. Direction is determined by fundamentals and sentiment. That's it. So the fundamentals means what are the factors that impact, the movement of price for a currency or for an index. So if we look at central bank policy, that's fundamentals, that matters. If we look at, well, I want to say those are second order effects like GDP, inflation, looking at the key data points. So hold on, let me see if I can get this. So for seasonality, what I would look at is fundamentals and sentiment, and specifically in sentiment, you want to look at risk sentiment, whether it's risk on or risk off. And then for fundamentals, the most important factor for NASDAQ is liquidity. So if you can find like a really reliable liquidity index, like a global liquidity index, and some people use the VIX, which is the volatility index, instead, just to show how much volume is expected in the markets. That will give you a good measure about whether there's money or whether there is, what is the word I'm looking for? Intention for people to start trading in the market. So I would look at markets in 3 to 6 month stretches. This is kind of how I build my outlook for the year. Is I look at the central bank policy and how that relates to liquidity. Right now, there's no rate cuts in March. There was no rate cuts in January, obviously. And right now, the probability of a rate cut in May is looking very slim. And so what's the chances that we get back to this easy monetary environment? The party is back on, the music is back on, and valuations start ripping through the roof and crypto is booming. I would say unlikely, even though we're seeing crypto and stocks start to boom. So the environment does not support this one-way move straight up. I think that the bullish movement we've seen for the past 3 to 6 months was the market getting ahead of the rate cuts this year and pricing it in. But I don't think we have the fundamentals to support a straight line up for stocks and for this bull run to continue moving. Let's look at sentiment. The sentiment is, at first, we were expecting 7 rate cuts this year. All of Wall Street was enthusiastic about the end of the tight monetary policy environment. And so the market got ahead of itself. Now the sentiment is kind of more cautious after the first Fed meeting, where Jerome Powell gave guidance about the fact that not to expect a March rate cut, and that inflation should not be expected to just drop to the 2% target right away. He said things like, if the market does have a slight uptick in inflation, that won't make us panic. We'll have to wait for 2 to 3 months of data, and then we'll be able to assess blah, 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 blah. So long story short, the fundamentals and the sentiment surveys point towards a bullish year, but not this blowout kind of banger of a year that we were expecting when we first came in. There will not be 7 cuts. There will not be, a QE. And if we do see either of those, which is massive rate cuts or money printing, it'll be because we hit a recession, which is just bad overall. Okay? So that's my take on the economic outlook, which is NASDAQ is mostly driven by risk sentiment and central bank policy. Central bank policy seems to support, at some point this year, a more easy environment. And I think the market is just getting excited and betting on the future. The big sectors of the future are obviously biomedical technologies, VR, AR, chip manufacturing, and then obviously hardware. Because for all these things, there needs to be a hardware component to run all of these different platforms. So right now, I believe we're in a bubble where nothing else is performing in the economy. So people are dumping other stocks and then all getting into tech. But whenever that happens, just like the 2001 bubble, by the way, guys, on the 30 minutes, I'm seeing this floor start to get formed and I'm seeing this 88 kind of retested. So we might not see this full correction down until later in the week, in which case this is what the trade could look like. Oh, that's beautiful. Yeah, I'm going to enter a trade here just as a scalp. I'm looking at this break just for some of my NAS masterclass folks. If we look at it from, I know I'm on the lower time frames, bear with me here. If we look at it from the neck break here down, we just hit the 88.6, which is right below the Asia session lows. If we look at phases, we got phase 1 right here, phase 2 right here, and then potential phase 3. So we're going to have to put our stops a little bit lower just in case this is an extended phase 2. And of course, last but not least, beautiful 886 on the smaller time frames. It's risky because of the placement of where we're at. Clearly, this is the buy level down here. We're right in the middle of the range, which is one of the riskier places to trade. So waiting for a pullback here for buys would be ideal. Waiting for shorts up here would be ideal. Taking a trade here is very risky. And so even though I've identified the structure and the structure is valid, does the risk and reward and the location of price make sense? To me, not really. I think if we keep holding this level, like if it wicks down right now and then closes right back above, I'd be tempted to take that trade. But this would be the highest probability opportunity. Still keep an eye on it though. Nice rejection. I got in at the 88.6. That's the setup I'm in. I'm in that right now. I'm in that right now. Yeah, guys, location and context is crucial. I really almost jumped in. But look, this is the 88.6, right? My 88.6 boys out there and girls. Oh, that's crazy. Wow. Okay. So these are your take partial zones, and this is your entry zone down here. So as the market is pushing further and further away from the entry, it gets riskier. As we hit TP, like you definitely don't want to be buying. Don't, and this is just a tip for all the masterclass folks. Don't ever buy at your target. Ever buy here. The only way that you would buy at any of these zones is just like what happened here, is that the market will break through and establish some bullish intentions here. It'll establish a new bullish range, kind of like a path to follow, like this wick, for example. And then it'll come in for a pullback deep back inside the range, deep inside the range. That's an ideal time to go long again to catch the continuation. So buying at the target zone, no. Buying at the retest, yes. So buying up here, that's a no. Buying down here, potential. Buying down here, even better. Put something in the chat if that makes sense. It's a very basic concept from way back in the day called buy low and sell high. All right, if you took the gold trade, let me know in the chats if you took the gold trade. I feel like the chat is dead today. What happened, people? Is everybody asleep? Why is everybody just mad quiet today? What's the dealio? You guys fucking, I don't even know. I got nothing funny to say. It's just kind of weird. Said gold was nice? Yeah, it was. Come on now. Come on now. But of course, analysis and execution are two different things. I took the trade obviously because I didn't take the trade, excuse me. I marked up and analyzed the trade as an analyst, kind of just doing market analysis. As a trader, I know better than to break my rules and to trade the one instrument that I've lost the most money on. I've lost more money on gold than any other instrument, and that's why I quit trading. So I was sitting there asking myself for about 8 months, when I kept losing, I made a promise that no matter what, even if I lose all my money, I'm going to master gold. You know what happened? I lost all my money. It happened. It sucks. And I realized I went and did some back testing because obviously if you're not reviewing your trading account, your trading history, your P&L, your trade execution, and just overall results, you need to review to figure out how you can make it better. I realized that I was making money during the week and giving it back on gold because I had made so much money on gold taking signals when I first started. I was chasing this high of catching a trade and it runs for 150 pips and I'm over leveraged and then the whole world opens up. Most of you that keep falling into the same traps, I have this like eye opener for you because the reason that I was doing it was because I had a lot of early success just guessing or gambling and I was chasing that high, that original high that I had. So every time I'd make 2-3 grand on gold or on NASDAQ or S&P 500, which is what I was trading back in the day, SPX, I would give it all back in one trade on gold. And so I was like, okay, from now on, I'm going to cut that out. And it wasn't that I was winning more. It wasn't that my win rate was better. It wasn't that anything had changed other than not giving back the losers on these over leveraged positions on this pair that I shouldn't have no business trading. So if there's an instrument that is dragging your account down, regardless of how good of an experience you've had with it, if it is consistently ruining your account, then you or ruining the profits that you've made, consider cutting it out completely. Every time as traders, we're kind of arrogant. All right, I'm losing a lot of money on Fridays, giving my money back. So again, for 6 months, I told myself, no matter what, even if I lose all my money, I'm going to master Friday trading. Imagine how stupid I was. I lost so much money doing that. You guys know what would have made me more money sooner? It's just not trading on Fridays. Imagine I would have got paid 3 times, 4 times as much for doing way less work. The 2 days I was losing money during the week were the most stressful. They would ruin my week, they would ruin my day, and of course, they would have a significant impact on my balance. So cutting that out changed my life. So a lot of the time when you're looking at your trading and you're looking at all the habits you have and which ones are conducive and which ones are destructive to your success, usually cutting stuff out will be more productive for you than adding stuff in. We're doing a 3-day boot camp in March to kind of get everybody's mindset back geared. Some folks had New Year's resolutions that fell off. Some folks want to get activated, but they're not activated. They're asleep at the wheel. So I'm going to be doing a 3-day boot camp. A big piece of that is going to revolve around, it's going to revolve around, I want to tie this in. I don't want to give away too much. One component is just going to be general lifestyle habits. The other one is going to be general goals and really setting milestones that are achievable. Most people say, I want to quit my job. Okay, I'll ask them when I'm doing the one-on-one coaching, how much money do you need to quit your job? What is this aggregated number that you need to hit? No one has a clue. Setting goals is not just about telling the world or telling yourself what you want. We all want stuff, but creating a path forward and creating a step-by-step system for how to get there, that's what's going to actually get you the result. And so that's what we're going to focus on during the masterclass. So number one is going to be a generalized kind of mental outlook, which is sleep cycle, diet, daily habits, your information diet, what you're allowing to kind of get in here, how that's going to affect your success. Because that's the basis. If you're tired of shit every day because you're eating shitty food, you're spending too long scrolling at night, you're staying up way too late. When you wake up, you don't have a morning routine, you're jumping straight to it. You're staring at your phone in the mornings. You're always doing something that's not conducive to your success. That's the first step because you're not going to be able to have that clarity of thought, the decisive decision making, all the things that you need to be a good trader. The second day is going to be focused on that goal setting and opportunities and really building a plan forward that you can stick to, because sustainability is important here, and something that's going to get you to where you want to be. And the third one's going to focus on trading specifically, which is what are the biggest issues that traders deal with? What are the biggest issues that you might encounter or probably have already encountered, and how to build a plan forward so that you don't fall into the trap of thinking that this is the end of the world. Some of you might be dealing with psychology issues now after a losing streak, okay? You don't understand that nobody gives a fuck. Okay, some of you guys are taking it so serious that you don't understand that if you die today, no one would give a shit about your trading. And so mindset has to go back to We've kind of live in a society now where everybody feels like things are worse than they are, where the influence of other people or the fear of failure has gotten so much worse. I'm here to remind everybody that it does not fucking matter. Like the people that are online or whatever it is, like the scrutiny or your friends being like, oh, Roy's not going to make it as a trader, right? Oh, he blew another account. This is back in 2020 and 2019. I thought I had made it. I thought I had figured out the market. I blew another account and another one. And the scrutiny of people around me was such a big factor. I started to feel embarrassed and it would impact my trading. People, when it comes down to having a rock solid mindset, it does not, nothing outside of you matters. Not a single thing. And if you don't have that level of mindset, I encourage you guys to hop onto the boot camp and to reset your mind, reset your perspective. So the chat dry just like everybody else last night. Whoa, buddy, just because you out here on that Virgin gang don't mean you have to put that on the rest of us. Some of us had an incredible night. You think I showed up here with all this high energy, this smile on my face for no reason? Come on, bro. You gotta think. All right, don't put that on us. Some people here are in committed relationships. Some people here got mad game. This is the Chart Addicts live stream, brother. Don't disrespect the community like that. Yes, that's relatable, of course. Why is US 30 and S&P going up and NASDAQ and gold going down? Idris, do a homework assignment real quick and come back to us. Let us know the results. Go look up the top 10 companies in US 30. Go look up the top 10 companies in NASDAQ and tell me what you see. Or, yeah, tell me what you see and then we'll talk about it. He said gold is terrible. Well, that's not true either, right? Gold is not good. Gold is not bad. Gold didn't take your money. Gold didn't deceive you. Gold just is. If you lost a bunch of money on gold, guess who's the dummy? Right? You guys like personal responsibility? I blew my money on gold. I used to be the guy that says, bro, I hate UJ. Bro, UJ's out to get me. Imagine how stupid I was, thinking the market gave a fuck about a $10,000 account. Right? Imagine how stupid I was, thinking the market was running my stops. Oh, bro, they're coming after me. For the $136, you think they're paying billions of dollars at Citadel Securities for high frequency traders and PhDs so they can take $130 from me? Imagine how stupid I was. I would literally come up with anything to avoid personal responsibility. All types of conspiracies and all types of delusions. As soon as I started accepting full responsibility, guys, I got slipped live on the stream by one of the major prop firms because I was trying them out live. I got slipped. There was freezes, there was self-dealing, there was server issues, there was manipulation every single day. All right, everyone's like, bro, that firm this and that firm that. No, guess whose fault it was? Who put a gun to my head, told me to pick the sketchiest firm around? Nobody. Who told me to take those trades on that prop firm without looking at the news first? No, I did that shit. So all of you out here that are struggling with mindset, the first step is personal responsibility and accountability. And if you're not willing to do that, the boot camp is going to help you accept the circumstance you're in right now, face it, and then start making steps forward. Because until you do that, ain't shit about to move in your life. We said LMAO. Oh, he's talking about. Oh, he's talking about people getting laid. Oh, that was hilarious. Oh man, what firm was that? I'll tell you guys off stream. All right. The last thing I'm going to do is add insult to injury right now. A lot of these prop firms are working their ass off, and I'm not gonna add fuel to the fire. I do want to encourage everybody to be mindful about what's happening in the industry. If you're looking at just buying new challenges and you don't really care about what's happening, it's not just a USA issue. I hope everybody understands. It starts with USA because clearly we have the best regulatory environment, and it puts a lot of scammers on skates. However, whatever everybody moves to next, C-Trader, Ninja Trades, DX, they're all going to go under the same scrutiny at some point. Whether you're not a US citizen, let's say that you're in Germany or Canada, you're next. You think MetaQuotes is looking at all the bullshit and the mess that was happening under their technology and being like, yeah, you know what? As long as they're not doing it in the US, we're fine. Everybody else can keep doing this sus shit. Now, at some point, it's going to turn, and other jurisdictions are going to start to get hit with the same exact BS. All right, let's see what we got here. I'm going body to wick. Did anybody have this drawn anywhere else? I feel like this is an 88.6 because we already had all three phases, but I feel like I have my fibs a little off today. Because we already had all three phases. If we just look at that phase one, that phase two, and this could potentially be phase three. So I'd like to see a double bottom if I'm going to go long here. So you can either wait for a reversal pattern, either inverse head and shoulders or double bottom, or wait for the recovery back above that support, buy on the way back up, and then when it comes back for the retest, buy again. So half the entry on the way in, half the entry on the pullback. That's a safer bet, but the real entries would already, they'd be way down here. You'd be getting a late entry. So ideally, we'd go down to the 15-minute, wait for a double bottom, and then once I see the reversal pattern, I'm ready to go. All right. Pretty straightforward here. He said gold buys at 1990 were what do you say? We're amazing. Hitman Johnson. I think I might have to borrow that name, brother. I might have to be Hitman Roy. Hitman Roy. I have a fib drawn from the 5-minute breaker. Okay. That's kind of what I was thinking. I was like, it had to be a smaller time frame break. Because originally, this is where I had it from this break right here. And we already got that. We already got that first reaction at the 886 and then blew right under. So then if I take this all the way down to this swing low, it puts us at 695. Yeah, I don't like this. Are you talking about this 5-minute break right here? All right, either way, that's too much guesswork. There's some pretty obvious options here, which is we make it down here, great buying opportunity. If we break back above this area of 17,780, then we can take a scalp trade right here. I know it's a little risky, but this is going to be a smaller time frame, phase one, phase two, phase three kind of situation. 17,736 body. Oh, you just went to the one breaker down. See, I don't like that. I'd rather do the top breaker or the bottom of the impulse. That all of these breakers in the middle, that's too sketchy for me. It's not I want to say sketchy, but I have not backtested that execution enough, for me to really consider it. But these are all things that I'm looking forward to backtesting, which is kind of optimizing the strategy itself. By the way, magnets still undefeated, hit the zone. Clearly, we're in a pullback right now. We're in this retracement. There's two options here. We're going to pull back inside the range and then continue. Or when we pull back inside the range, we close under these lows. If we close below these lows, then we're going to have a retest and drop. For now, I'm still bullish on the dollar, still bullish on the dollar. So I'm expecting a price to play around here at the 103.7 and then continue up. That would mean Euro USD. Yes, it's buying up right now, but it's going to continue that bearish trend once the DXY is finished with this pullback. So GBP USD, Euro USD, I'm bearish on those. I'm still bullish on USD JPY. If I can find this right here. USD JPY just hit the final target that we kind of had planned out for a while. And then we just hit the top side 88.6. So I have to remove a lot of these extra zones here. Top side 88.6. Which means we had this sell, pull back about 90%. Now, if we see the double bottom, this could lead us to a nice correction back to the 61. And if price forms support here, then that's going to be the continuation. This is exactly what I see happening. So we're either going to get this correction at the 88.6, or we're going to get this correction off an aggressive break and then retest of the 88.6. Okay, so some of you guys that know the continuation model, you know exactly what I'm talking about there. All right, pretty straightforward stuff. We'll talk about the prop firm news here in just a second. Anybody have questions, comments, concerns in the chats? The 3-day boot camp will begin. I think we were supposed to start March 1st, but I think we are pushing it to March 7th, just to give enough time for folks to make a decision about whether they want to take their trading serious this year, really kind of get going, get into a program that's going to be all intensive, all inclusive, and really geared towards taking you to the next level. I've been there, people. I've been in the situation where I knew everything I was supposed to do. I had a very clear plan like laid out for me for the year. And for some reason, I just was not moving. I was not moving at the intensity I needed. I wasn't moving in the right direction. I wasn't doing the habits I needed to do. And for some reason, I just could not kind of get myself active. And then I got around some people that were just naturally, I don't want to say naturally, but that was their personality. They were just go-getters. They would wake up early. They would crush it. They would go on these morning runs with a bunch of people. And just through environment, I had a completely different outlook on my success. I had a completely different outlook on my habits. I wasn't using my willpower anymore to muster up this energy to go to the gym, or to muster up this energy to go and be productive, or to muster up this energy to be my best self. I just fucking did it. No one wants to be the loser in the group. No one wants to be the bum in the group. You're not going to be the only person ordering junk food when everybody else is health conscious. So your environment is going to determine your success. Okay, willpower is crucial, but your environment, just by default, you'll be doing the right things every day, right? If you're chilling with crackheads, let me give this extreme example. If you're chilling with crackheads, when somebody says, "Hey, do you want some crack?" You're not gonna be like, "What? No, of course not. I would never do that." You're chilling with crackheads. You might consider it. You might be like, "Huh? Well, these guys not dead yet, right? Maybe I'll consider it." But let's say you're a crackhead and you're chilling around people who are just always active. There is no crack anywhere in this fucking country. You moved to Dubai. There's no crack here. Guess what? You're not going to be a crackhead anymore because you're around. It's not in the environment. The best example is the Vietnamese, or is the U.S. soldiers that came back from fighting the war in Vietnam. They were heavily addicted to opium out there, and to heroin, because it was readily available, and they just had a massive problem out there with soldiers kind of getting addicted. When they came back here, they stopped doing heroin because it just wasn't around. It was not normalized. Your environment is always going to determine your level of success. The reason I love the Chart Addicts group chat and the reason we close down the doors to people who go through one of our courses first is because I want a competent set of individuals that I can depend on. Because my environment is going to be more important than my willpower. I get in the chat and I know if I say something like, "Oh, I'm going to over leverage on this trade," I'm not going to get a ton of support in the chat. Hopefully, the Chart Addicts VIP members, you're going to light me up for that. Like, bro, that ain't what we learned. What do you mean you're just going to over leverage on this trade? That accountability only comes from having the right people around you. If you chill with a bunch of degenerates and you're like, "Yo, I'm about to full margin this trade," they're going to say, "Yeah, do it. Full margin the trade." All right. Environment, major key. All right. So we have that break right back above the lows. This is looking really good, people. This is looking really, really good. We're right back above the 88.6. So I'm going to take a long position here. As soon as well, hold on, how much time we have left? 14 minutes. Let me see if the risk and reward on this thing makes sense. Could be a 3-to-1. All right, I'm going to take a buy entry. Let me do this on my phone here. I'm going to take a buy entry here. Even though we're still sitting below the 88.6, like ideally we want to see that push above. But I know the longer I wait, the worse my risk and reward is going to be. All right, so I'm going to take this. I'll also take it here on this simulator, just to show you guys what the entry would look like. Oh, here it is. 17,580. The stop loss would be 17,724. Yeah, just for reference to everybody who's like, oh, no, this is a simulator. Oh, he's trading a simulator. Yeah, this is I am using a simulator right now to show you guys what the trade would look like because I'm not going to open up my MetaTrader anymore on these streams, okay, as my own personal prerogative. So I'm going to take these trades from my phone. I'll still put it up for a visual just to show you where the entry and exits would be because I think that's the most valuable learning opportunity. It's just showing you here is exactly what the trade looks like. And then we can look at the visual and kind of be able to make a decision about, you know, what are the best entries, what's the best execution model, the way to go. Okay, let's talk about prop firms real quick and then we'll go through news. So our prop firms going out of business, some yes, some no. What really happened, and there's actually a few things happening that I think the prop firm industry is not being truthful about. Number one, FT. Let me just kind of walk through the timeline how this started. I told you guys from the beginning that I've refused almost every deal that has come our way regarding promoting a broker or promoting a prop firm. I've been in this industry for a long time and I've been connected with some of the major players in this space. And I've been offered deals that you guys can't imagine. Now, because of my background from traditional finance and holding a broker dealer license and holding an investment license and holding an investment advisor's license, I realized that I like the regulatory environment in America does not allow for me to confidently start one of these businesses or be involved in one of these businesses. More power to them for doing what they did because obviously they saw something that I had missed. And then you guys remember last year it started with MetaQuotes getting taken off the App Store for violating their terms of service. That was the canary in the coal mine. That's when I realized the Armageddon is here. And if you guys had been watching my streams back then, I was talking about that every day. Now, keep in mind, I'm not one of these people that's like out here calling out every prop firm and looking for the demise of prop firms. If I try a platform and something goes wrong, I'm going to speak my mind. That's plain and simple. But I believe the prop firms are so beneficial for traders that we all need to support that industry and make sure it doesn't go away. Nobody wants to go back and fund a $600 brokerage account, $600 margin account, where you can go buy a challenge that's for a potential $200,000 account. Like, I don't think anybody wants to go back to trading margin. Or trading just a margin brokerage account. MetaQuotes gets taken off Apple. That's when I started to reach out to my contacts and realized this is not going to stop here. Then the brokers start getting hit one by one. Remember, there was a few firms that were saying Armageddon is here. They were saying that they're the only regulated broker. Everybody hops onto that platform and they all get kicked off MetaQuotes. And then the prop firms, and then FTMO stops taking US clients. That was the start of the real prop firmageddon. And then now one by one, firms are getting taken off, starting to stop accepting US clients. Some firms are just going under entirely, closing their doors. And so I believe that there was regulatory pressure on MetaQuotes to do a full audit to figure out who they were servicing. And once they realized the extent of the white label operations and the extent of the grift in the industry, they forced MetaQuotes to shut everybody out. Black Bull is one of the major brokerages. They're listed here on TradingView. They were forced to kick off the prop firms that they had, Fund and Engineer and a few others. The brokers were all in on this. Like, I wouldn't be surprised if Oanda was offering B-Book services to a bunch of these guys. I wouldn't be surprised if Pepperstone was offering these services. Again, speculation. We look at Black Bull was offering a demo server to Fund and Engineer. Why the fuck do you need a broker to provide a demo server if it's all fake simulated trades? What does a broker have to give you why are we paying commissions on simulated? The whole thing just starts to kind of get shadier and shadier. So I think the number one issue, by the way, I'm sitting in some drawdown here. I might close this trade. And I mean, I'm going to wait to see if we get a double bottom and push up. Real quick, I'm moving my stops to below that 1722 low, just in case there's that double bottom. And what I'm looking for specifically, just for everyone to kind of have an understanding where my head's at, is that the market could be coming in for a retest right? A retest of this body, and then it wicks above and continues going bullish. Whenever the market closes below your entry zone and the bodies are closing under, typically not a good sign. Typically a sign that sellers have a little bit more juice, in their arsenal to keep pushing the market lower. What I would like to see is the market establish a floor here, so it can come down and wick, push up, or just make a double bottom and push up. That would be ideal, right? I might even enter a second position. If the market closes below this low, I'll be closing this trade, allowing the market to finish whatever it's doing to hit that zone, and then we can buy it up from a discounted price. So this is my first entry, kind of taking that shot on phase 3, and yeah, just for some understanding, that's what we're looking at here. Granted, 30-minute candle closing below that zone, not the most engaging. As VIP members, do we have access to the boot camp? Yes. If you guys bought your VIP membership, then you will have access to the 3-day psychology boot camp for free. So anybody who is a coaching student or masterclass, if you guys reached out to us and you got your VIP membership to stick around the community, you get free access to the masterclasses that we do. Why? Because we're not trying to hold back from any of the members. You're going to get access to education. You're going to get access to accountability. You're going to get access to inspiration. You're going to get access to demonstration of all these different concepts, up close and personal. So I think it's a no-brainer, guys. I genuinely think it's a no-brainer. But then again, what do I know? Boss, what do you think of the value of 17,447 to make a lower low? My two entry zones are 17,600 and 17. Let me see if I can remember this off bat. 17,600 and 17,247. I think that was the zone. Oh my, gold is going to be one of the best trades of the year. I think gold is going to end up all the way back up at 2065. Wow. Just wow. Okay, for the second NASDAQ zone, it would be oh, we already got 17,600. I got to go up higher time frame here. Oh, I guess not. Okay. Higher time frame trade idea. So right now, we're buying this up. Obviously, pretty risky. It's like a 30-minute scalp, pretty high up in the market. My two opportunities, if this fails, is double bottom at 17,600, or to come all the way down here to 17,247. Let's just call it 17,250, just because it's going to be easier to remember. All right. If you took the NASDAQ trade, shout out your entry real quick. We got a pretty good confirmation here where we had a beautiful wick retest. Beautiful wick retest right there. So the market tried to push outside the range, and then buyers were able to hold it up. We just have to close above the 88.6 for this trade to remain valid. If we don't close above that zone, the 17,788, 17,790, and we don't close above this level, the trade falls apart. All right, to finish off on the prop firm point, the prop firms will be around. I think there's going to be a month or two where different firms are getting ahead of themselves because they see the market competition and they realize, yo, I could get in right now, beat everybody, and just, launch the next big thing. And I think that the regulatory environment is going to smack them around, and they're going to constantly get hit with these new problems they have to solve every day. Just saying that it's simulated as opposed to saying it's real capital is not going to cut it. The brokers have completely cut off the prop firms. So now this game is going to get shadier. Every time regulators step in, people don't suddenly become angels, right? What they do is they become better at scheming. This is my advice to all of you guys with children. If you're going to parent your children the same way a regulator treats their citizens, you're not going to incentivize them to be better people. You're going to incentivize them to be better liars. It's just the way it is. It's fucked up. They were sneaking out for a reason. Same with the regulatory environment. The prop firms were unregistered in the States for a reason. If they had any interest in playing by the book, they would have. So the regulator stepping in, all that means is any hope of regulation is out the window, and now they're all going to go offshore. This is my issue with crypto since day one. I've been in the crypto industry since 2014. I've lost money in MT I've lost money in every major thing that's happened in crypto. And there was no regulator to step in. And I thought that was healthy because I would learn my lesson through greed. Eventually, the regulators got so strict that they kicked every major innovator out of this country by trying to make an example out of XRP. They even had Coinbase considering leaving America. Coinbase is America's sweetheart. And so regulators do nothing except for ruin the chances of good people. I think that obviously there needs to be a referee because some of these guys, the shit that they're doing is just extremely shady. But a referee does not mean you get to make up the rules of the game. Referee does not mean you get to choose who's in the stands and who's not in the stands. People are not here to see the ref. People are here to see the players. And so regulatory environment will, as of right now, I think crush the hopes of having US-based firms. Are we looking into having a US-based prop firm? Yes. Are we looking at having a US-based game company where everybody can still trade live markets and get paid for it, but it won't be under the guise of capital or trading? We are considering that. That's kind of the situation we're in. All right, I see a lot of folks took the trade. I'm holding this thing out, but if we close below the body of this candle, then I will be exiting this trade. I am sitting in some drawdown. However, drawdown does not mean the trade is invalid. Only a break of structure invalidates a trade. Okay, so once we break through this level of structure, and especially this area here, then the trade will no longer be valid. The market could come down and hit the 88.6 from this low and still be valid. For now, I'm taking a scalp opportunity. Even though, I mean, it looks like a scalp here, we're taking a scalp entry for more of a swing trade kind of situation. But the scalp right here, this is the area of structure I'm watching. Okay, so if it breaks through and then wicks above, the double bottom is valid. We still have a shot here. If we close below this body, I'm going to close the trade. The reason I'm not closing now, and this is something I would encourage everyone to do, when you're in a winning trade, don't close your profits when it's retracing. So you'll be up in a trade, you'll be up $1,000. Then it'll start retracing down. And you're like, it's retracing on me. Let me close it. And it's floating at like 600 bucks. And so instead of bagging the 1,000, you bagged 600. You kind of took profits on the retracement. For closing a losing trade, when the market is, going into negative and you're down a bunch of money, I personally don't close the trade right here. Even if the market breaks below, I'm like, okay, sellers have confirmed that they're in control. What do? I wait for a pullback. And then once it pulls back, a little bit closer to my entry, then I'll close. These are some slight tips to help minimize your losses and maximize your gains, which obviously, when we're looking at a game of risk and reward and win rate, all these little tips and all these little micro habits will ensure that you have a positive risk and reward expectancy system. All right, people got some crazy good entries here. People got some crazy good entries. All right, my computer is bugging. Good morning. I just entered a second position on my account. Just want to be very truthful here. I did enter a second buy position. Not to encourage anyone to do anything, obviously. This is just my personal prerogative here. Like obviously there's a chance we go bearish. Like I get it. All right, stops to break even for that gold trade. This is obviously a simulator, so I'm just showing you what it looks like visually. This is very straightforward. Okay. This is a perfect example here. So the difference between closing down here in panic and then waiting just a little bit for the pullback is about half the money. So if you're floating, let's say negative $500 down here, you'd only be floating about negative 250 right here. So even if you're unsure about the trade, even if you want to close it, even if you're panicking out, there are still smart ways to reduce your risk and to close out intelligently. All right. What do I think about US 30? Ouch. I say the trade is still valid. I say the trade is, I'd say the market's going to retrace down here to the 78.6. And then by the time we come back and check, I think we'll be up here. The only thing that's giving me some pause is because like these wicks above, well, I mean, we kind of close below this area, but above this body right here and above this whole area of support, it's still kind of showing us that there's higher floors being formed. The only thing that would make me pause is the closure below this body right here. But it showed like we closed below the body and then sellers tried to take over and buyers shut them down, put them in their place. And then sellers tried to take over again. You guys can see the 88.6 got retested as resistance, much like we're seeing on NAS, and the market pushed itself back up. Okay, so buyers are in control. I see upside on US 30. It's too late for an entry, obviously, because we just broke that TP1. But I think that if it comes back down to the 88.6, that would make for a great opportunity. All right. I'm giving this thing one more shot. I'm giving this thing one more shot here. Let's see. If it starts to break down bearish, I'm going to close the trade. There's two options here. Is like the market is going to fill this wick to the downside and then continue to SL, or the market establishes the floor and starts to push up. I'm still hopeful that the market is just messing around before it finally wicks back above. But clearly, guys, sellers have stepped in. The retest below the 88.6. So I'm aware of how risky this trade is. But trust yourself and trust the strategy. Right? It's not about is the trade going to play out? It's about are the confirmations available to make this trade make sense. All right. So my first entry was on the break back inside, sitting in about 40 points of drawdown. I am not feeling too hot about that. However, I did enter a small position on my first entry. And then the second entry, I got pretty close to the body here. I ran 752. And that was a little bit of a bigger position. Roy, draw the fib on the 4 hour. Are you talking about for NAS or for... Are we talking about 4 hour body to wick? Yeah, I can't do that. That's deceptive. Yeah, I still don't see it. Send me a markup, James. Let me see what you're looking at. Long gold at the moment. It's going to go to the moon. Yeah, you're a little bit late. NASDAQ is in a range. Everything is in a range. Everything is always in a range. Am I trading futures on my account? No, I'm trading prop firm CFDs. I'm trading a simulated account. All right, I'm trading a PO box in a third world country. That's what I'm trading. I'm trading a PO box in St. Lucia. I ain't trading futures. I am about to win this NASDAQ trade, though. I don't want to get too cocky here, but I got a good feeling about that one. Said using two devices. Well, I'd be careful with that. See, the prop firms make you pay for that one. Wow. Great sell entry. Nice, Mike. Yeah, I saw that. I just don't like it just doesn't make sense to me, James. Like this is not the low. Like we go down to any other time frame, that's not the true low. And we have a wick all the way down here. I can like I don't know. It's a tough one. Personally, I don't like the 4 hour body to wick. Any updates on the 88.6 boys merch? Looking forward to it. Yeah. Have you guys signed up for the wait list or not yet? Okay, if you registered for the wait list, sometime in early March, we're gonna have I believe the orders ready to go. So that's gonna be launching here soon. Yeah. Sitting in this drawdown. Can we sing some drawdown songs? Like just get past the time? Somebody lead it off. Tech stocks are having a weak day. Health and financials are doing better. See, I'm not gonna even read the rest of it. My boy said they're having a bad day. Yes, I'm a day trader, but if you guys think I'm looking at financial news on a day-by-day basis, like it's all about the big picture, right? Somebody tells you, "Oh, I weigh this much." Okay, if I don't have any other info, what the fuck am I supposed to do with that information? You'll tell your doctor, "I weigh 120." How tall are you? That could be good, that could be bad. It's your cholesterol, right? Some people say, "Oh, I'm big boned." You actually might be big boned. Who fucking knows? Context is important. So you look at a print, oh, tech stocks are having a bad day. Well, what about yesterday? And more importantly, when it comes to markets, what about tomorrow? Y'all get what I'm saying? Look at data, look at economic data, especially in terms of sequence, in terms of 3 months, 4 months. That's what the Fed does. Like right now, we had a few bad inflation prints. And everybody keeps asking me, Roy, that should be the reason why we're going to crash. Because if we're missing our target on inflation, clearly that's negative. And I'm telling people like the Fed needs more info. We're only 2 months in. There's a seasonality effect in January that typically leads to some of the inflation that we see. And then in February, okay, that's one more data point. So I think after the March CPI news, the Fed is going to have enough data to at least figure out if we're doing rate cuts or not. Right now, it's still too early to tell. And they might need even another month before they're able to choose whether they can do rate cuts. So do what the Fed does because that's kind of what we're trading here. We're trading what we think the Fed is going to react to, how we think the Fed is going to react, and we put our bet in before they make their move, so we can get in early. And I think that the Fed is going to look for the next 2 months of data, and that's exactly what I'm going to do. And so I'm going to assume the market is bullish until it proves me wrong, and I'm going to be waiting for the Fed to give us some clarity before I make any, brash decisions. All right, I'm in profits on the second position. So if you guys wanted to close this trade, it's now or never. All right. Obviously, I'm holding because I accepted the risk of my trade before I got in. But if you are looking to close, this is going to be about as good of a chance as you're going to have. All right. So you're in profit on the bottom position, you're in drawdown on the top position. Price is sitting in between both of them. And if you entered correctly, which means you put a small position here and a larger position here, you should be in deep profits. Not in deep profits, but you should be in profits for sure. So they can cancel each other out, which is the beauty of scaling in with a better position at the bottom. Said gold is retracing heavy. So you're telling me a market doesn't move in a straight line? You're telling me markets don't just move in one direction? You're telling me that all of this right here wasn't just a candle and the same color candles the whole time? That's nuts. That's unbelievable that the market would not just move in a straight line. Sorry, no, I'm sorry. If that sounded facetious, I'm sorry. But yeah, there's two things you can expect on. Is that second pullback to your entry and taxes, right? There's only three things that are true in life. The sun will rise tomorrow, the government will take your money, and NASDAQ will retest entry. Put that on my gravestone, okay? Be like, was he a loving father? Was he a loving husband? He said 88.6 boys to the moon. All right, put that up. Put a picture of Shiba Inu next to my fucking casket. What a day, what a day, what a day. Yeah. No shit, Sherlock. That's why I said today only. I didn't say they were weak long term. Yo, I haven't lit somebody up in a long time, and you might just be the first. All right? You might just be the first one. Except I can't even roast you because you have God in your name, and that's the most blasphemous thing. My boy's talking about Allahu Akbar, right? Which I'm pretty sure translates to glory be to God or glory be to God. I'm not gonna sit here and light this dude up for I fucking get struck by lightning the second I walk outside. So I'm gonna let you have this one. You say one more thing out of turn, I'm gonna send you back to fucking Valhalla. I'm gonna fucking banish you to the shadow world. Just bring the gulag back. But we should bring back Fight Club. We should get Brad Pitt to do another movie. All right, that's what we should do. Said the gulag. The gulag is easy work, bro. You're just in there. You're like, oh, I just get to go respawn. It's like respawning in a video game. You would act a lot different if you had the VR headset and when you got smacked up in the video game, you felt it. You'd stop respawning so much. You fucking right. We don't even need to bring back the goal. We got to bring back bullying. All right. Most controversial thing I'm going to say for the next 3 days. We should bring back bullying. Like, Roy, you're crazy. What are you even talking about? What do you mean bring back bullying? Bullying is one of the worst things to happen in society. I understand, but then this wouldn't happen. We still had bullying. My dad always said there's only two things guaranteed in life: death and taxes. Yeah, I added that. I added that second retest. Right, you got to have that. Everyone enters Nasdaq, puts their stops and break even, and they think that the game is over. Market comes back, snatches it. Give me your fucking money. Give me that fucking entry, and then runs to the moon. Bro said, put that shit on my tombstone. Said, based, mashallah. Come on, bro. Says, bring back Sharia law. Bro, this dude is crazy. Oh, over my dead body. How about that one? God bless America, too. All right. Awesome stuff. Let's talk about some news, overall news. What else is happening? What else is happening? Oh, here's a big deal. The government signed a $96 billion package, and the 2/3 of that money is going to go to Ukraine. The rest is going to go towards the border. It's called a border bill. All right, get this. I used to work up in Congress for a couple of years as a legislative assistant, meaning I would help write legislation. I would help give tours to some special guests around the Capitol. I would work with the congressmen and their chief of staffs to be able to, talk to their constituents and everything in between. So a lot of the times when there was a disagreement in the House or in the Senate and they're trying to pass legislation, they would name it some generic shit. Like the Patriot Act, for example, was the most unpatriotic piece of legislation that's ever existed because it took away all of the US citizens' freedom to not be spied on by the government and all these other invasive practices. So they'll name it some shit like the Inflation Reduction Act. How the fuck are you going to reduce inflation? You're sitting here trying to print a trillion dollars. How are you introducing $1 trillion bill and calling it the Inflation Reduction Act? You guys see how this game works? So they called it the border bill, but 2/3 of that money is going to go to Ukraine. All right. We're already in so much debt as a country. We're running a budget deficit for the government. The interest payment on our debt, you guys all have debt. I mean, hopefully some of you guys don't, but most of you have debt if it's a mortgage. Think about your interest payment every month. Do the math real quick. Imagine our government has $1 trillion interest payment every year. That's just the interest. At some point, the national interest, the interest on the debt, will be so high it will be more than what we're making in tax revenue, long story short. And so the only way to pay off that debt or to service that debt is to print money, keep putting us into more debt. So in the middle of the most unsustainable economic crisis the world has ever seen, they want to print. And if they're not printing money, they're borrowing it from someplace in the government, and then they're going to make us pay for it later to service that debt. It's criminal. $96 billion. Do you guys know how much it would cost to end world hunger for a year? I did the math before. I think it was like $21 billion. They could have ended world hunger for 6 years. This is an absolute shit show. So hopefully we get a new president in town and we can kind of go back to some semblance of normalcy. He said, based American patriot detected. I like that. I used to work in the House of Parliament in the UK. Love to see it. Debt doesn't really matter if your GDP is growing. That's my number one, that's my biggest pet peeve is you modern monetary theory people. The MMT crowd is literally ruining the world. All right. While I agree, if every single country in the world is playing the debt to GDP game, which means that it's not about how much debt you have, it's about the debt relative to how much money you're making, your overall production. If I have $1 million in debt and I have no assets, no business, no nothing, that's a problem, people. I owe a lot of money. Now, if I have a business and if I have a lot of opportunity and if I have properties that are worth millions, okay, so that's my production, my GDP, the size of my wealth, and then I have $1 million in debt, not a big deal, because relative to the GDP, it's minuscule. The United States and some of the G7 nations can't afford to play the MMT game, which is we can print an unlimited amount of money forever because as long as the economy is still growing, we're going to be able to compensate because debt is irrelevant, is just relative to the size of your production. When America prints money, everybody else in the world is forced to print money. Otherwise, it devalues their currency. And so if you're in an economic situation where you can't afford to print money, if you're, let's say, fucking Turkey, let's say that you're Europe, because Europe actually had this issue during the COVID crisis. America printed so much. Europe had a choice to either allow their currency to fail, right, or allow their currency to just get too expensive, which is going to hurt their domestic production and exports and imports. If your currency is too expensive, no one wants to buy your goods because they're going to have to pay more for your goods. The only thing that helps when your currency is very expensive is importing stuff because you have to spend less euros to go buy the same stuff. So at the end of the day, when we printed, it forced Europe to print as well in even bigger quantities, and that completely ruined their currency. So we're forcing countries to do this, and Japan is a great example. So MMT is unsustainable. We cannot just keep blowing up the debt. There has to be a stop to this. Otherwise, this is just a game of who collapses first. In which case, I have my list. You guys can see my podcast with Brent Johnson. The yen, fucking hitting the road first. Europe, the euro, trash, dog shit. We go GBP. I got some faith in them. They completely seceded from Europe to avoid the economic collapse of the European Union. So I at least give them a little bit of credit there. Australia? Hell no. No, there's an old saying in markets where if China sneezes, Australia catches a cold. China's sneezing. They're having the biggest real estate crash. They're having their version of the '08 financial crisis right now. Evergrande, which is the largest real estate developer in China, went under last year, and that was the start of a massive debt snowball that's kind of unraveling right now. By the way, we're almost in break even on that first entry. The second entry that I took is in deep profits now. Say deep profits, like 35 points. But overall, this is good. You can also move your stops a little bit higher. Give it 10 to 20 points below this wick, but I think that would be appropriate because we've already established the floor. We already have the liquidity grab. If it comes down again to fill this wick, I'm out. Like I'm going to close manually anyways. And that's the reason why I'm going to move my stop loss to below this wick because I believe that is the low of the recent impulse. Okay. Let me see. Any questions, comments, concerns? Debt to GDP ratio. MMT is sustainable as long as everyone plays ball. Chris, when was the last time anyone in the world played ball? Like, why are we always talking about MMT is for people who spent too much time in school. MMT is for people who have a PhD or who spent 15 years writing their research paper, but have never actually made real money. They've never ran a business. They've never actually dealt with regulatory policy. They've never actually dealt with the repercussions. The best book to read about this is Skin in the Game by Nassim Taleb. Just to show you how corrupt that this game really is. But if you guys think that MMT is sustainable, I don't think you understand the first thing about finance. I don't think you understand the first thing about economics. Roy, where can I sign up for your new merch? It's there's a link in the description. There's a link in the group chat as well. UK is in a recession, is doing much worse than the EU. For now, yes. but you have to look at the overall, you have to look at the big picture. How many immigrants did Germany and the rest of the EU nations take in? Okay, when you look at demographic shifts and you look at sustainability, you have to look at who is the government responsible for. And if the size of the population continues to increase for folks who are not producing in the economy, every single one of those economies is going to start to feel the pain. I know this is like a whole thing. It's like, oh, don't turn immigration into a boogeyman. People, I immigrated here from Lebanon when I was 11 years old. I understand the immigration process very well, and I understand how hard it is to do it the right way. But there's you cannot argue with the fact that when you introduce a completely different demographic, you increase the size of your population dramatically in a short amount of time. And then you also increase the amount of responsibility that the government has to take care of these people financially. You're gutting any hope of improvement for infrastructure. So those countries are not going to improve. You're gutting the hope of nationalism and people having that national pride to want to do better. That goes out the window. And so I think that Europe made horrible decisions accepting, and I don't know why they did. I think Germany had like a guilty conscience or some shit. They accepted something of millions and millions and millions of refugees. Long story short, if I was to park my money anywhere in the world, the United States is the only place that makes sense, right? The geographical borders with the Atlantic and Pacific, friendly neighbors with Canada and Mexico, even though there's an invasion on the southern border. We have an infrastructure that is built for capitalistic endeavors. People here want you to make money, even though your friends might not. There might be some bums and some haters. But the society as a whole in America encourages money making. The law encourages money making. And so if there's any place that investors are going to park their money long term, it'll be the States. Now, the MMT thing where we can just print endless amounts of money. The only way for us to service this debt in the future, okay, because I mean, you guys tell me, how the fuck are we going to service this debt other than printing the currency into oblivion to reduce our debt obligation, which I think is even more stupid because if you look at the dollar milkshake theory, which Brent Johnson invented, we have a podcast together on our channel. It's incredible. The dollar demand will always outpace the supply. So no matter how much the United States prints, people will still want dollars. And so we can't, this option that I keep hearing economists say that we can just devalue the currency and we can inflate the debt away. Inflate the debt away. Okay. The other option is we have to increase the marginal tax rates to be able to have more tax revenue coming in to compensate for the interest payments. Do you guys get it? So that is not sustainable in any way, shape, or form. If it is going to be this way, which it seems like the MMT crowd has sort of taken over the public conversation. If that's the road we're going down, you guys have about 3 to 5 years to get rich before this game is over, before it will become increasingly harder to get rich. By the way, if you guys are going to close this trade, it's now or never. Okay? If you're going to close this trade, it's now or never. I closed my top position. I'm holding my bottom position and break even, and I'm going to let this thing ride to see if we get this recovery. I'm confident we get a recovery here, but obviously we have to be patient and allow the market to let us know. Ladies and gents, I did not expect to be here for 2 hours. I'm gonna hop off pretty soon. 2 reminders: we're doing a 3-day boot camp for psychology, specifically for traders, but this is just more so if you're looking to get your life back into gear, if you're looking to kick things back into overdrive and make this year count. If you had New Year's resolutions that kind of fell off, you haven't felt like you have the intensity that you need to achieve your goals this year, I recommend you guys head over to the website, chartaddictsfx.com. Link is in the description. Click live classes and register for the 3-day boot camp in March. All right, let's make this year count. You're not going to get better results doing mediocre shit. You have to move to the next level. And if you know what you need to be doing, you have a plan that you built early this year, but you're not executing, that's problem number 1. So I'd love to see you guys at the boot camp to change your life for the rest of 2024, guaranteed. If you don't find the boot camp impactful, I'll give you a full money back guarantee. If you don't find the 3-day boot camp impactful towards changing your life, you will get a full refund and you will be sent back on your way. And then, of course, early bird tickets for the FX Summit 2024 conference are available. We are announcing the first speaker. We said tomorrow, but I think we need 2 more days for the run-up. We will be announcing the first speaker in the next 2-3 days. Prices will go to full price after. If you're looking to get your FX Summit tickets, get them now because once we start announcing the venue, the speakers, and everything in between, prices will go to full price, and it's going to be more expensive to get those tickets. Happy and safe trading, everybody. If you have any questions, we'll pick up in the VIP group chat, and I'll see you guys bright and early tomorrow morning for another New York Session live trading stream. Happy and safe trading, chart addicts. Take it easy. Peace. It's always awkward when I end the call and it's still recording. It's like when you say